Welcome to Magnet Minutes. This is Jordan Kimmel with an update for May 5th, 2022. And it's really my pleasure today. We're bringing on Charles Rotblut from the AAII, that's the American Association of Individual Investors, where Charles is both the editor of their journal that comes to my mailbox every month and a vice president with operations. And Charles, thanks so much for joining us.
Oh, thanks for having me. It's a pleasure.
All right. So Charles, before we even get started, I have to share, I'm a lifetime member. I've spoken in many of your chapters. I do look forward to the journal coming every day. And, for the record, I'll let you share it yourself. But I believe the American Association of Individual Investors is a nonprofit and one of the largest associations of investors, really focused on education, not about selling anyone's process. So it's a really multimedia way you help your audience. So why don't you give a little bit of background for AAII first?
Yeah, certainly. We are, as far as I'm aware, probably the largest nonprofit investment education organization focused on investing, catered towards individual investors. We were actually founded in the late 1970s by Jim Clunan, a professor at DePaul University. And at the time, as you know, Jordan, there wasn't much information available for individual investors. Certainly all the things that's available now, the websites, the books, a lot of that just wasn't in existence. Right. And so Jim Clunan saw an opportunity to really educate investors. And he was working at DePaul, previously had experience actually running an options trading firm. So he learned firsthand the gaps that individual investors had and the hurdles they had at the time to making smart investing decisions.
Right. And so, and not only was it started back before a lot of information, I think started obviously before the internet.
Yes.
Right. And so things have changed quite a bit. But Charles, let me just, share for the audience. I know you're a CFA. I know you've written a book years ago. I love the title, Better Good Than Lucky. And what the whole focus really about, you've shared, it's about taking this, very complex business of investing and really bringing it into more simple terms, more lay terms. And what I really, really enjoy is that there's no selling at AAII. What you like to do, I think, is highlight a lot of different ways to invest, different styles to invest, and then share as much about that through both the journal and talk for a minute about the meetups that you have, because I do believe sometimes investors are isolated, and the more they could talk to people and the more they could share and get advice from one another is a super helpful part of AAII's basis.
Yeah, it is. And we talk about the collective brain of members, meaning having members learn from each other and interact. And there's certainly no single right way to invest that works right for every person. But there are several good strategies. And so one of the things we did when we started, probably about a year or so after we started, we launched local chapters. And these are basically volunteer-run groups across the country. And obviously the pandemic, it obviously limited the ability to meet in person. We've switched to webinars. And really, in the past year or so, we've launched what we call our community section, which is a online forum on our website that allows members to interact. So now members can, depending on where they live and depending on the chapter itself, can meet in person. They can meet online, and we're moving towards an integrated model where some presentations and interaction occurs on our website, on our community section. Some happens in person at the local chapter meeting. And so we give members, the choice to interact how they see fit. And maybe it's a combination of the two. Maybe some of it's online, maybe some of it's in person. I mean, I know you and I have both been in conferences where you see the conversation go on the hallway and it continues for quite a while in the hallway.
Right. And I think that's so beneficial. And, when you talk also, Charles, about the collective mind of AAII, one of the most quoted statistics that comes out is the bullish bearish sentiment of this really large organization of individuals to get a kind of handle on whether investors are kind of overly optimistic, overly pessimistic, or basically how really the nation is feeling. It's that widespread, the organization. And so I just, want to share that. I don't know when that started, but AAII, a bullish bearish sentiment, is quoted, one of the most frequently quoted statistics for sentiment I've seen in the market.
Yeah, we started actually in July 1987, so we have this really long history, and I point that out because in April, this past April, the month that just finished, two of the rings that month were in the 16 percentage point range of bullish. And to put that in perspective, not only is that unusually low, but if you take all the weekly readings from 1987 through 2022, they both ranked in the lowest 30 of all those thousands of readings. So it was not just, well, that's low, it was extremely low. And I do think that goes to reflect all the uncertainty, rising interest rates, inflation, the war in Ukraine, obviously what's going to happen in Washington with the midterm elections, all that's swirling together and really having people uncertain. And we're seeing that, but that does tend to be a very bullish signal. What I've seen in the past, when optimism gets to be unusually low, for those familiar with statistics, it's basically more than one standard deviation below average. The S&P 500 tends to outperform over the following 6 and 12 months. And we've seen this happen repeatedly, not every time, but a very high percentage of the time we do see that outperformance.
Right. And that's why so many people watch that. And so let me kind of share, preparing to talk to you. And again, I know you have such a wide audience. Couple quotes came to my mind, and I'll just share them. It goes off the basis really of what AAII is really about. And you just touched on one of them, but one says an investment in knowledge always pays the best interest. And that's a Ben Franklin. And to your point, Peter Lynch said, you get recessions, you have market declines. If you don't understand that's going to go on and you're not ready, you won't do well in the markets. And the whole point, I'll let you talk to both points, but your whole firm and yourself takes a long-term common sense approach, not highlighting gambling, but highlighting investing.
Yeah, and I think both are right. And you look at education, you look what Peter Lynch said, just understanding market history is one of the most important things people can understand, because everything that's happened in the past, we're probably seeing it now, probably will reoccur in some semblance, maybe not exactly.
Right.
But if you understand what's happened previously, it helps you. And a good example is having a conversation online with a few people at the StockTwits website about, what's going to happen with the market. And one thing I pointed out was, well, the typical bear has historically, drop average about 22, 23% or so. The S&P 500 on that day was down 15%. So, and I'm not saying a bear market's going to happen, but if it does, and it's typical, we're probably closer to the bottom and further away from the top. So just having that understanding when you're looking at what the market is, you can draw a sense, well, I know typically, understand, typically there's more corrections, drops of 10 to 20% than there are bear markets. And when they're bear markets, they really don't tend to be that nasty. So it just helps you set your expectations when you look at the market and being nervous. And that kind of ties it to with Peter Lynch and Ben Graham, having that education, just understanding what's normal, what's typical.
Right.
It helps you set your expectations, and therefore might help you park your nerves and really think about why you're investing, which should always be your goals, what you're trying to do.
Right. And so a lot of the articles that you have, in your journal, and really some of the top professionals in our industry, both portfolio managers, Nobel laureates have written, and it's magnificent. A lot of it has to do happily with fundamentals. And it's almost a mirror image, than a year or so ago, Charles, when the SPACs were catching everyone's attention. And so I was saying, we have to bring out, more education, more understanding of fundamentals, not so much someone going on and saying what they like at the moment, maybe talking their book up a little bit. And so, the focus that again you have on longer term and on education, I think is the key. And on the bullish bearish, on the comments you were saying, let me just let you comment on a Warren Buffett. And he says, I'll tell you how to become rich. Close the doors and be fearful when others are greedy, and be greedy when others are fearful. And this kind of speaks just to the common sense that you shared a minute ago.
Yeah, and absolutely. Buffett's definitely influenced my line of thinking, and I know many thousands of investors,
Right.
possibly more. But I think that's just it. You really have to do the opposite of what your emotions want you to do, or at least know how to curb your emotions. And you look at the times of great buying opportunities, March 2009, 2000, or even 2001, when we had this horrible attacks. Nobody wanted to buy stocks, and people always hear, well, buy when there's blood in the streets. But really what happens is when nobody wants to buy, prices drop because there's no buyers to offset the sellers.
Exactly.
And at that point, that's when people are going to step in. So unless you're absolutely convinced the US economy is going to completely collapse, which means we have far bigger problems than talking about investing, you really need to realize that, hey, there's bargains. And the one thing that's always this huge contradiction is that people go to the supermarket, they'll have coupons, or, if jelly's on sale, they'll stock them in jelly. But when stocks are on sale, they don't want to spend. And you really have to think about, if I want to own stocks and they go on sale, I should be thinking that discounted mind of, I want to bargain shop. The stock I've been watching is now discounted. And yeah, it can be scary, but unless you're absolutely convinced everything's going to, basically go to hell in a handbasket, you've got to be in that mindset to put your emotions away. And you look at the great investors, people like Warren Buffett. John Templeton was a very good example of that. And there's a long line of investors who've made a lot of money by having that mindset of not chasing after what's hot now, but really trying to do the opposite, particularly when people are scared.
Right. You sum it up so well. And the fact is, I've been in the business for a long time, and there's only really been one time in my career when everybody said, hey, there's really nothing to worry about. And that was the 1999 era. And it was one of the ultimate tops. And so there's always something to worry about. There's always, it depends on how big the wall of worry is. But you know what we touched on a lot of things. Maybe there's something in your book, Better Good Than Lucky, that we haven't touched on yet. Anything from your book you want to kind of share?
Yeah, I like to go to the end of it. I give a 10-step process for analyzing stocks. And it's, nothing ground shaking. It's looking for growth, looking for fundamentally sound companies, looking for low valuations. And I think the real key to investing is just having simple rules. I think one of the best books I've ever read was the Checklist Manifesto. And even though there's little in that related to investing, they do talk with Guy Spear. It was this concept of that if you have this disciplined process and you have a list of rules, and every time you make a decision, you go through each of those rules, it leads to better outcomes. And one of the examples, they were talking actually about Van Halen. And I know people are wondering, what does Van Halen have to do with investing? But they used to exclude green M&Ms, and there's a lot of rumors about why they did it. But David Lee Roth said it was basically their checklist. Because they had such an elaborate setup, they knew that they saw green M&Ms in a candy jar, something else was missed. And it was their sign to go through the whole contract, check all the electrical plugins, check the stage setup. And so with investing, if you have this list and it's just going to be do, rinse, and repeat every time, you're going to make better investing decisions. And it doesn't matter if you're a value investor, you're a technical analysis, you're an index investor, just having this process over and over and over, that's the big key. And I think anyone who has my book, and if all they do is just follow that routinely, they're going to get better returns.
Right. I think that's fantastic, Charles. What you do if you took that approach, you'd be sure to remove all your emotions out of the process. And just those emotions of fear and greed, which are, so well documented as probably the biggest dangers you could, come across while you're trying to invest. It's that common sense. It's that, unemotional piece. And let me just kind of share, one other piece of AAII that I've always enjoyed. And, I was lucky enough to be on the list of the screeners for many years. And the reason I found it so interesting is that the job that's done, it describes exactly all these different processes. It shows basically which models, basically whether it's value, growth, or blend, are working at this moment without any judgment as to they're underperforming and they're outperforming. It's more of the what is taking place. And there's also great ideas that come from these fantastic models. So I always enjoy going on the website and always going and seeing what was picked and who's doing how. And I think that's a really extra special benefit of the online service.
Yeah, and it's great. So we have 60 stock screens. As you said, Jordan, you used to be on it. And we're both numbers guys. And stock screens, for those of you who are not familiar with them, they're basically database filters. And they exist for mutual funds and ETFs. And they basically look at the whole universe. There's about 5,500 exchange traded stocks. And they say, find me stocks with these characteristics. And maybe it's a PE, maybe it's a growth rate, maybe it's a dividend yield or dividend growth. But they say, find me these stocks. And what I always tell people about screens is they'll lead you to a stock you may have never heard of, but has exact characteristics you want. And so instead of like just focusing on a narrow group of stocks you might hear about in the news, it goes across the whole universe. And so not only is it unemotional because it's only looking for these characteristics, but again, it finds those stocks that might be a perfect fit for your portfolio that you may have never looked at or considered simply because you're unfamiliar with it. And so I think they're just fantastic tools. And I've used them probably for over 20 years, well before I came to AI. I don't know, maybe 25 years. I'm aging myself now.
That's okay. Well, you know what? I love being on there. Unfortunately, one of the folks I was working with suggested that I come off. I try to fight my way back on the list, but I really, really think that that's a great process. And let me just, share too, I have spoken in several cities, several chapters. There's always a really nice crowd when they're live, and hopefully the world is going to open up again. And even I'm sure the online forums as well, the local chapters will have really good discussions and help people really not be isolated in the investments, because investing is hard. And the more people you can talk to, and again, the foundation of AAII is education. And the more educated you could be, the better investor you're going to be. So I really want to thank you for coming on. Charles, is there anything you kind of want to wrap up with? Anything I forgot to ask that you may want to leave the audience with?
No, but I'll just share this one quote, and I always use my presentations from James Montier, and it's, if you don't know what's going to happen, don't structure your portfolio as you think you do. And it's really just that simple. I know there's a lot of uncertainty as we speak, but you're investing for goals. You're investing for retirement, kids' college education, perhaps a second house. Maybe you have your eye on a new Tesla, whatever it is. Think along those terms and just have simple rules, even if they're very basic. That alone will increase your odds of doing better than most investors.
Right. No, I think that's a great way to end it. And maybe, the thought is don't overreach, be sensible, be thoughtful, and cut the emotions out. And to AAII, hopefully doubling in size again, but you have hundreds of thousands of members. And you serve them well. And folks, I'll remind all our listeners, it's one of the best values, frankly, that you can find. It's nonprofit, it's tax deductible, and I'm a lifetime member, so I can't remember the annual fee, but it's remarkably low. Maybe you want to share the fee and the websites. dramatically easy. It's AAII.com. Do you want to maybe just share the fee?
Sure. It's very low cost. It's just $49 a year to become a member.
It's fantastic. And just so much pleasure to have you on, Charles. And I welcome you on any time as the market changes and we go through things. The one thing that won't change is really a grounded in fundamentals, unemotional approach is going to work. So once again, thanks to Charles Rotblut, AAII. It's really been a pleasure. This has been Jordan Kimmel with Magnet Minutes, and thanks for the time.
Thanks, Jordan.